Today, we're going to talk about an opportunity that you as an investor really don't want to miss out on. It's an opportunity that can fit both risk-averse investors as well as shorter-term investors, and I'm talking about Bed Bath & Beyond, or BBBY for future reference. It has seen a massive 80% drop in its stock price over the past year, but keep watching because I will reveal a price prediction. But before we dive in, remember that this is not financial advice, just some intriguing viewpoints that we wanted to share with you. But to fully understand BBBY as an investment case, we first have to examine the factors that have contributed to its decline. As we all know, the retail industry has been hit hard by the ongoing geopolitical situation, which has been exacerbated by the pandemic and compounded by the challenging economic situation post-pandemic, and BBBY is definitely no exception to this decline. The current economic climate is proving to be a challenge for retail companies like BBBY. High inflation has resulted in increased costs for goods, negatively impacting BBBY's profitability. As costs rise, retailers are forced to raise prices to maintain their margins, which can make their products less competitive and lead to decreased sales. This in turn also leads to a decrease in consumer spending as people have less disposable income to spend on non-essential products and services, further diminishing demand for BBBY's products and hurting their revenue and profitability. Additionally, the Federal Reserve's decision to increase interest rates as a countermeasure to inflation has slowed down the economy by making it more expensive for consumers and companies. This makes it more challenging for BBBY to borrow money and to finance expansion and growth, which could have a negative impact on the company's long-term prospects. But why was Bed Bath & Beyond experiencing a downward trend before the pandemic? Well, one of the major factors contributing to this trend was the tension between the United States and China. The ongoing trade tensions have led to shipping delays and inventory shortages, and since BBBY is heavily dependent on the overall supply chain in the retail industry, this has had a significant negative impact on their performance. So it's safe to say that recent events have taken a heavy toll on Bed Bath & Beyond, and the company has now dropped a bombshell. Filing for bankruptcy could even be on the horizon. This turn of events has certainly caught the attention of investors and market watchers alike, as the company's future hangs in the balance. But don't let doubts cloud your judgment, as Yoda would probably say, but now I will unveil the hidden potential of investing in BBBY and why it can be lucrative. So brace yourself for some exciting insights and get ready to discover the potential of BBBY stock. So why do I, like many others, think that there's an opportunity to make some money on the BBBY stock? Well, firstly are the indications that suggest that BBBY is not filing for bankruptcy. For example, the company recently hired a new senior vice president of stores, which seems unlikely if they were in the process of filing for bankruptcy. Additionally, BBBY's subsidiary buybuy BABY is launching a new exclusive brand called Ever and Ever, despite the supposed bankruptcy rumors. These actions do not align with the typical behavior of a company heading towards bankruptcy and may suggest that BBBY are trying to turn the ship around. Secondly, despite the red numbers reported in the quarterly report, an insightful tool many of the best investors are using, such as Warren Buffett himself, is pointing in the opposite direction. The tool I'm talking about is called fundamental analysis and should be near and dear to every investor's heart. You can actually watch this video if you want a more in-depth explanation and example of how it is practiced. The results of our fundamental analysis, which utilizes both discounted cash flow and relative value, have provided us with three potential scenarios for Bed Bath & Beyond. The worst case scenario predicts a 150% return on investment, while the base case suggests that the stock is currently undervalued by 74% with a potential share price of 12.5. However, the best case scenario is even more exciting as it predicts a return of 630%. These predictions are based on the stock reaching net income levels similar to those back in 2016. At the heart of my investment strategy is fundamental analysis, which allows us to gain a deep understanding of a company's financial health. However, it's important to note that fundamental analysis doesn't take into account market trends or stock price movements. Instead, it provides a fair value for a stock based on key metrics of the company. A thorough and positive fundamental analysis is a strong indicator of a lower risk investment. It's important to note, though, that there is no such thing as a risk-free investment in the financial world, but a long-term perspective of BBBY as an investment could be an attractive investment case. But hold on. on, don't put your investment plans on hold just yet if you're the investor seeking shorter-term investment cases. There's a tantalizing possibility that you could see some impressive returns much sooner than you think. Rumors are swirling about a possible short squeeze, which could mean big gains for savvy investors who act fast. Before diving into specific short squeeze price projections for BBBY, I want to equip you with a valuable tool for understanding the stock market, introducing a free, powerful analysis tool that provides a comprehensive look at any company listed on the Nasdaq. This is an essential tool for any savvy investor looking to make informed decisions. Want to give it a try? Well, check out the link in the description below for easy access. So if a short squeeze were to occur, what could we expect the stock price to reach? First, we have to know what shorting a stock means. Shorting a stock is betting against the company by borrowing stocks to later buy them at a preferably cheaper price. Investors who short a stock get a positive return when the stock plummets, while they lose if the price per share increases. Think of it as the opposite of buying the share where your profit would increase if the stock rises. Simply put, a short squeeze happens when the stock price goes up, causing investors who had bet against the stock to buy shares to limit their losses. This buying can push the stock price even higher, creating a snowball effect of sorts. This phenomenon has been known to cause wild stock rallies, such as the GameStop stock in 2020, which saw an incredible 8,000% increase in price. But short squeezes are not a common occurrence. To have a short squeeze in the first place, two conditions must typically be met. First, the short interest in the stock must be high, typically above 20%, and secondly, there must be a strong buying pressure, often triggered by a specific event or market sentiment that causes the stock price to rise rapidly. As for BBBY, the short interest is 33.5% as of the 26th of January. So BBBY checks the first box, but there has to be enough buying pressure for the stock to skyrocket. For GameStop, it was the Reddit group called Wall Street Bets that initiated the buying pressure. We can see that BBBY is also very popular among the group members on the platform. So if they manage to organize a coordinated accumulation of the BBBY stock and positive news were to come out, for example, that BBBY is headed for a merger or other news that would change the market sentiment, I believe it would push the shorters to sell their positions. But that begs the question, how high would it go? Given earlier short squeezes and the stock chart pattern, I would anticipate the price to reach around $35 per share before seeing some substantial resistance. But reaching that price tag would set you up with an investment return of around 1,000% increase from today's level. But remember, this is highly speculative and the price could go even higher as well as much lower. So both the fundamental analysis and the shorter term short squeeze can be very lucrative. But hold your horses, this is not an investment case for everybody. It's important to note that many experts believe the bear market is far from over. Despite recent dips in the stock market, it's likely that we haven't seen the worst of it yet. The next inflation update, set to be released on February 14th, could have a significant impact on the market. However, the market consensus suggests that the Fed will not raise interest rates as dramatically as they did in 2022. Keep in mind that investing in BBBY, or any stock for that matter, should be approached with caution and a thorough understanding of the potential risks. Additionally, there is a possibility that BBBY may file for bankruptcy, so it's important to research the company and be prepared for potential losses. Are you worried about a recession and how it may affect your savings? Well, don't panic. There's a way to not only protect your money, but even profit from it. Tune into this video and discover the secrets to recession-proofing your investments.